All right, all right. I think we should be solid. Are we live yet? Oh, come on. Should be streaming. Come on, man. Let's try this again. What the hell? Finally, finally. Good morning. Sorry about that. I had some issues with YouTube. I don't know what wasn't connecting, but I'm back on. Good morning, everybody. Welcome to our morning note. A little later than usual. It's 9:05 Eastern Standard Time here, April 28th, 2021. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you for joining me this morning and every morning, 9 a.m. Eastern Standard Time. Before we begin, make sure to click bottom right hand corner of your screen, little white icon, our logo. Click that, subscribe to our channel, turn on notifications, like our videos. Really do appreciate it. Really makes a big difference in the YouTube algorithm. I know I'm not really a tech guy, but that's what my tech team tells me. All right, so Dow futures down 56 points, Nasdaq down 18, pretty flat. S&P is actually green, 0.05%. Russell is down about 0.15%. Bitcoin futures down about 0.4, actually up 0.45% at 55,050. Crude oil is up 0.87%. Gold futures down 0.48%, 1770 an ounce. Silver 1.40 an ounce to the downside. 2607 an ounce, down 1.42%. Euro dollar is down 19 pips, 120.71. US dollar yen is 108.90, up 16 pips. The VIX right now is down 3% now at the 17 level, and the Dixie, which is the dollar index, is up 0.12%. So obviously yesterday we had a lot of earnings. I covered a lot of it in the aftermarket report that we do, aftermarket video. And if you want to check that out, that's on Instagram Live. So again, I'm not going to be very redundant and speak about the same things. There is a couple of new items that did come out. Shopify came out today, so let's go ahead and chart that real quick. Shopify did come out today. It did beat. Great earnings report. Let me go ahead and actually read you the numbers on Shopify. And I do own Shopify shares. Shopify, I did place that. I did put the numbers on Instagram. 988.6 million revenue versus an estimate of 862 million. Gross merchandise volume 37.3, 33.44 merchandise volume billion, and it was a GMW increased by 19.9 billion in Q1. So $2.01 EPS versus 78 cents was a massive beat, revenue beat across the board. So their revenue guidance, fiscal year 21 operation income to be below year over year, but still very, very strong. They were up nearly 5%. I think they're probably up now 5% pre-market. Shop expects to accelerate operational expenses in 2021, build at growth investments to build commerce infrastructure for the next decade. So I think Shopify is an amazing company. I did buy below 1,000 and I'm still holding it. So I think Shopify is a name you stick with long term. Obviously, they did talk about Facebook today. They were saying that the launch of Facebook Shops has begun to make a difference for the company. Buyers using Shop Pay by March, you hit USD 24 billion. So again, you're going to have a little bit more competition. I know that's something that a lot of people like to say, especially with Tesla. But yes, competition is healthy. You're going to get that. But Shopify, I still believe is a big winner long term. So I think you stick with the name. Another one is Boeing. Boeing did report today, this morning, 15.22 billion revenue. Estimate was 15.12 billion, so they beat on revenue. Adjusted loss per share was $1.53. Estimate was at negative 90 cents. Operating cash flow was negative 3.39 billion. Negative adjusted FCF 3.68 billion. Boeing Part 2, this is their earnings backlog, grew to 364 billion at quarter end. Also resumed 787 deliveries in late March. Commercial airplanes added 76 net orders in Q1. 737 program currently producing at a low rate, expected to gradually increase. One other Part 2, 2021 financials hinge on commercial market recovery. Expect higher revenue, lower use of cash. Continue to expect passenger traffic to return to 2019 levels in 2023 and 2024. So let's go ahead and take a look at Boeing. Boeing did slide a little bit. It's down about $3 pre-market. If we go ahead and actually chart, I'm going to go ahead and expand it. We'll chart the names that just reported. Looking at Boeing, it is now at $2.39 a share. Really, all it did is break down below this daily channel. I would not trade it here as of yet. They want to go and take a look and see if it does revert back to right around 245. If it does revert back to 245, I would probably take a look at 255 calls since it's still staying in this daily channel. Again, the quarter wasn't terrible, but again, it's like the 7th consecutive quarter of just no profit and cash burn. So again, tough for Boeing, but I'm still seeing some upside in Boeing. Again, that's when you know really the economy is getting really hot, is when Boeing actually fully recovers. Speaking of another company that I'm looking at, Deutsche Bank. Deutsche Bank was a company that really took a big hit with their derivatives book. They have tons of derivatives. Look at their chart today. They are now at $13.57 a share, about $1 up a share. So if you look at it here, it is new 52-week highs pre-market. Deutsche Bank obviously is a German bank, but they were really toxic for a long time, and they had a great quarter, a really great quarter in terms of investment banking and fixed income trading. I like this very, very much. This tells me a lot about the financial sector. If Deutsche Bank, which is pretty much the worst house on the block, did that well, then JP Morgan, Bank of America, Citi, you stay along the banks, and that's a really, really good reinforcement of the thesis I was thinking in regards to the summertime boom, that financials will definitely gain some more traction to the upside. I have some longer term XLF calls. They're for June. I'm nearly in the money on them anyways. But again, I think JP Morgan, Bank of America is fine. Citibank is really, really great. Morgan Stanley, Goldman Sachs. Those names should be added on dips. Absolutely. I think longer term, I'm expecting rates to go higher as more demand and the economy tends to heat up in the summer, that we're going to get higher rates. And with higher rates, guys, you have to hit financials. So I would focus a little more on the trading side on financials, and probably buy some financials in your portfolio, maybe Goldman Sachs, JPM, and Morgan Stanley, I would say, and Citibank. I would say those four are pretty much your best bet to go with. So Deutsche Bank was a really, really, really good news to see. So take a look at it. I don't know if they have much options in the options market, but we'll probably take a look. Today also, Fed Chair Powell does speak today at 2:30 p.m. I'm holding some SPY calls that expire today. So again, I want to see exactly what the movement is. Right now, it's basically flatline. Here's what I expect from the FOMC. No rate increases. Again, we know that's not going to happen until possibly 2023. The real thing you really want to see is if the Fed is going to taper. The word taper, meaning they're not going to buy any more government bonds. If that happens, expect the market to pull back. If they say nothing is going to change until 2023, including tapering, we're going to soar. You're going to see 4,200 by the end of the week, or probably 4,200 by the end of the day, 4,200 by in the S&P. So again, that is the big word you want to see, is the word taper. Looking at everything as a whole, obviously we still have Facebook and Apple reporting today. What I've been seeing has been absolutely excellent numbers. Microsoft had an excellent number. Google had an excellent number. AMD, exceptional number. The only company that I saw that looked really just like in terms of earnings, was really Netflix. Even Pinterest had a lower guide and everything like that. Wasn't terrible. They're still a growing company. That's fine. I can live with that. But Netflix, that really stood out to me like that wasn't a great quarter. Everyone else, the really mega cap names, they crushed it. Financials absolutely crushed it. And again, you're seeing these earnings coming back. These companies are profitable, and from all accounts, they're probably doing better than 2019. Microsoft had their largest boost in revenue since 2008. Microsoft is an absolute beast. I talked about it yesterday. Microsoft below 250 is an absolute gift. I highly doubt we get there. I think that they're going to be bought up here. I think Microsoft is going to be bought the dip here. I'm actually looking to buy some calls or possibly next week, if not the next week. I would definitely take a look at the 260 calls. Keep an eye on Microsoft. The algos have overreacted on this stock. It's a great one. You own that thing. Not even a question. Google is actually cheaper because their earnings were better. So their PE ratio and valuation is actually cheaper, even though the stock price went up. So take a look at Google. If you don't own Google, fine. You can buy it in SPY-G or QQQ. It's an amazing company. YouTube itself would probably be a Fortune 500 company. Just think about that for a second. Cloud, ads, YouTube, Google is starting to get to that point. Well, I think it was a fortress. Tons of cash. They're doing buybacks. Microsoft and Google, I think those two, you can't go wrong with those two. All right, I know a ton of stuff I talked about. My apologies. Okay, good time to short gold. I wouldn't short gold yet. And the reason I say that is because you don't have Powell speaking. So again, if the printer go burr and more printing, then yes, gold is going to probably go up. So again, right now, I would not touch gold as of yet, but I can see what you're seeing. Really, on the future side, all we're seeing is a channel to the downside. Nothing has really changed yet. If we start breaking below 1700 again, then we can revisit. Good morning. I suspect NEO may react like Tesla on its earnings down on NEO play. We already hit NEO this week. Looking at the chart, it did reject the 50-day. The 50-day was my target. We hit that on Monday. It rejected. I would not touch NEO. I would not touch NEO ahead of earnings. No. If investors are expecting dovish stance from the Fed, why hesitation in equities? Really, the one thing that's standing out is the stretch in valuation. That's really it. Like, stocks are getting to the point of PE ratios to get a little expensive, or what everyone calls frothy. Some of the earnings have met those expectations. Google, Microsoft, for example. Some have not. Some may have gotten too ahead of themselves. Again, Netflix being probably one of them. Again, their earnings per share is just not enough yet in order to meet that valuation. Apple's the big one today. Amazon's the big one tomorrow. Facebook's the big one today. So again, we need to get the digestion of all these big names and see, do they deserve the valuation moving forward? A lot of investors are saying, yeah, you had a good quarter, but what do you have coming forward? A lot of these companies are raising their guidance. AMD raised their guidance, and again, they got rewarded. So we need to see if Apple's going to raise their guidance. We're going to see if Facebook is going to raise their guidance. We're going to see if Amazon's going to raise their guidance. Again, I know the big three mega cap names that are coming back up, but that really is the hesitation, is that, okay, last year, did we price in a recovery? Are we still pricing in a recovery? Or are we pricing in future growth? What are investors pricing in? So again, that's really the thing that I think the hesitation is coming out for investors. But to be fair, the S&P is near all-time highs too. Which direction do you expect XBI today? XBI is the pharma, I think it's healthcare, not healthcare, but the biotech ETF. My apologies. Looking at the daily, rejected the 50. Okay, fine. Take a look at the hourly. It's reverting back to its trend. I would, meaning the channel here basically, I would not touch XBI here. I don't see anything that's going to change for XBI. I don't know if there's any kind of big earnings. I think Amgen reported they missed, so I really don't know exactly what the bellwether or anything would come out for XBI. Good morning. What do you think about Biden's $1.8 trillion plan? I did read some of that this morning. Again, he's going to have the State of the Union address tonight. Again, he's going to announce it. So there's a lot of things that to digest too, but there's a lot of things that are a little more important market-wise short-term, like Fed Chair Powell and these earnings. Remember, President Biden's request or his proposal is just that. It's a proposal. Rarely, if ever, do presidents get everything they want on a proposal, especially in his first 100 days. It's very rare. It doesn't happen that way. So again, expect a lot of change in terms of the policy. So again, we will see what the moving parts are. We'll see more in the State of the Union address. Anything I see, I'll go ahead and retweet it. So give us a follow on Twitter In regards to if it passes as is, well, I guess we just have to wait and see. Does it affect the market? I don't think more debt will change anything short term because interest rates are so low. We did run up debt the last two administrations. Nothing really changed there. So that's where we are currently. I mean, it really remains to be seen if any kind of proposal or tax proposal that the Biden White House wants to push is even going to even get past the House, even with majority. Again, there's a lot of moderate Democrats too, so we got to see. Microsoft, great for sure. Apple calls it strike price. If you're playing earnings, you just got to be careful. But Apple, I do have some Apple calls. I have the 140 calls. Again, that 135.71 level, 74 level is absolutely key. Let's see if we break that. How many stocks do I hold in total? I think I have like around 30 stocks. I'm gonna have to finish it up here, guys. I have to do the YouTube live for our premium members here in a second. I know there was a bunch of questions. There's a lot of stuff I was talking about. QQQ call is funny enough. It's basically flatline since Google killed it and Microsoft kind of came down. So it's kind of like break even. It's right there on the 100. I wouldn't touch it right now. Are you expecting a crash in equities? I am not. I am definitely stay bullish. I expect a blow off top in the summer. I think 4,200 does break. If not this week, next week. And once we do, we'll kind of hover around to 4,100. And then we're going to get to 4,400 probably around August. Just my call. And I am definitely staying bullish. I think we're going to have a huge growth spurt in the next 3 years. Absolutely. We're nowhere near the top. Google Beast Mode levels to add. I think Google here is cheap. If you wanted to add, you add here. It's a great company. If you were looking for a cheaper level, again, you said, hey, I just want to go ahead and buy a cheaper level, the 50-day moving average, 21.28, and go from there. All right, guys, I got to go ahead and check in with YouTube Premium. That's our live trading session. I didn't do one yesterday with them because I was expecting a choppy day yesterday, which I was correct. So today is going to probably be a little better. So I'm going to go ahead and work with them today. If you're interested in joining, go to our website, GARcapitalFX.com. We do YouTube live trading every week. It's usually on Tuesday. I made it this week for Wednesday. And I do actual charting and trading with them live. So join me, GARcapitalFX.com. Just go to YouTube Premium, and then there it is. All right, guys, we'll catch you guys later. Have a great rest of your morning. And I'll catch you later today for the after market report on IGTV. Apple, Facebook do report. Let's go ahead and get it. Enjoy, guys.